everybody. Welcome to today's fundamentals. Hello, Pedro.
Hello.
What's up in the FX market?
Well, the euro against the dollar is moving in an upwards trajectory. The British pound is also appreciating against the dollar. It would appear that the Japanese yen has weakened slightly. Therefore, the pair dollar yen is moving in an upwards trajectory, I would say, but seems to have found resistance at a particular level. The dollar against the CAD is moving in an upwards trajectory. The Aussie against the dollar is moving in a downwards fashion, and the dollar against the Turkish lira is still moving at new all-time highs, if I'm not mistaken, above the $26 mark at this time.
And weren't also China's GDP rates out yesterday?
So yes, China's GDP rates came out yesterday. On a year-on-year level, they were down by 1%. So personally, this would make sense. They're down by 1% due to the fact that China's reopening post-COVID happened in January. Therefore, it would be safe to say that it is anticipated that they would be down by 1%. Yet on a quarter-on-quarter, it's down from 2.2 to 0.8%. So markets had anticipated a reduction in GDP on a quarter-on-quarter basis to about 0.5%. So the 0.8% is still higher than market expectations. Yet in the grander scheme of things, from a 2.2% to a 0.8% is very striking. So it's I'd say, highlighting market worries of China's economic slowdown combined with recent financial data from China is worrying markets, which is why also the Aussie might be moving in a downwards fashion due to their over-reliance on China as a main trading partner for their exports. Hence, if China's not doing that well, that would mean that demand for Australian goods will also decrease, therefore weighing both on the Chinese yuan and the Aussie.
And what about the RBA's minutes that were released today?
So the RBA's July meeting minutes were released during today's Asian session. Now, in those meetings, it was hinted by the bank that more rate hikes are to come. So essentially, they're worried about persistent inflation pressures in the economy. In addition to a continued tight labor market, it would appear that the bank is hinting that they will continue hiking into the future.
And how has gold's price been reacting?
Gold's price is up. It's broken the $1,955 mark. So this could be coinciding with fears of recession, slowdown in China, therefore global recession perhaps, though a bit far-stretched, in addition to market worries about a recession in the US and the UK.
And how about the US stock markets?
Well, the US stock markets are slightly neutral today, so it appears to be within yesterday's open and close, albeit at the closing range, which was positive yesterday. Now, what is interesting is that we have Morgan Stanley and Lockheed Martin's earnings today. So, based on market expectations, market analysts are expecting that both Morgan Stanley and Lockheed Martin will both beat last quarter's earnings per share and revenue as well, therefore potentially providing support for the stocks. Now, we also should note that Microsoft's deal with Activision appears to be finding some support in the UK. So as a small reminder, it was blocked in the UK, accepted by the EU, and then fought in the courts in America, which was also passed. Therefore, both the EU and US have approved, so given the green light for this merger to go through. Yet the only major resistance at this point is the UK. So they've given them a 2-month extension in an attempt to find a deal perhaps to alleviate the fears about cloud gaming in the future, etc. But personally, I do believe that it will go through.
And how about oil prices?
Oil prices were downwards yesterday. They're finding some slight support today. So recent comments by Saudi Arabia that they're extending their voluntary oil cuts, if I'm not mistaken, up until December, could have provided support for oil, yet worrying data from China, given its predominant as world's major oil importer. So the world's largest importer is not doing that well in terms of their economy. Therefore, fears about future demand of oil could be driving oil prices lower, despite Saudi Arabia's attempts to drive the prices higher.
And what else is in today's calendar?
Well, in today's calendar, we note the US retail sales on a month-on-month basis, which are anticipated to support the US dollar. The Canada's CPI rates, which are also expected to weaken the loonie. The US industrial production on a month-on-month basis, which might support the dollar. We also note BOE's MPC Ramsden is due to speak as well. The US API weekly crude stock. And in tomorrow's Asian session, we note New Zealand's CPI rates.
Great. Thank you, Fede, for your time. And everyone for watching. Join us after a short break for technical analysis.
Hello and welcome to today's technical analysis. So, starting off with the euro dollar, as you can see, it's broken above our first moving upwards trend line on the 12th of July. So, despite breaking below, it hasn't broken on the upwards moving trend line incepted on the 6th of June. Excuse me, 6th of July. It's moving higher. It's finding some support. Hasn't broken below our upwards moving trend line or S1. Tested resistance at 1.12750. RSI is still above the 50 figure and the 70 figure, implying a strong bullish market sentiment persisting in the euro dollar. Therefore, I would maintain a bullish outlook for the pair. As you can see, this could be a small, minor, temporary market correction to the mid range of the Bollinger Bands before moving higher. So we're maintaining the bullish outlook for the pair. Yet, should the US retail sales come in as expected, so providing support for the dollar, we might see the pair breaking below S1, but I would not expect it to break below S2. Why? Even if it does come in as expected, I do not think it is significant enough to completely change the pair's direction. Providing temporary support for the dollar, yes. But in the long term, in the grander scheme of things, I think that the Fed maybe hiking a few more times before remaining on pause, or they could induce a recession in the US economy by over hiking. Therefore, in the long run, I would be going long on the euro. Now, for the British pound, it's broken below our upwards moving trend line. So I keep a temporary bullish outlook. So why would I say temporary? It's still in the mid range of the Bollinger Bands, slightly below, but I would not be surprised if this comes in higher. It hasn't tested support at 1.304 yet, and the RSI is still above the reading of 50, which still implies a bullish market sentiment. This for me could have been a small market correction lower before moving higher, so taking up some longs perhaps here before moving higher. For a bearish outlook, it would need to break below S1, whereas for a bullish outlook to continue, it would need to break above R1 at 1.3145. So what's interesting is we have a new MPC member, so Megan Green, who is an economist. So more hawkish outlook for the BOE, and as we said before, other market analysts as well, we were anticipating two 50 basis point hikes with another 25 basis point hike being down in the pipeline as well. So personally, I think the bank will hike by 50 basis points in the next meeting. So I would be going long on cable as well, on cable, excuse me. Why? They still have a long way to go. Inflation is very high in the UK economy. They may be, I'd say, strangling the economy as well by high interest rates, but it appears that they're willing to do that in order to bring inflation down. Hence, moving higher for the pair on a technical and on a fundamental basis. Now, dollar JPY. So it's found some support, as we said in the fundamental section, at 139.10 dollar mark. It's failed to break above in terms of the body. It's moving lower. It's at the mid range of the Bollinger Bands. Hence, I would maintain a sideways bias for the pair as it broke above our downwards moving trend line, yet failed to break above R1. Now, note that the Bollinger Bands are narrowing. Now, this implies low market volatility. In addition to the RSI remaining perhaps near 50, it's close to 30, but I think it's a small market correction. So even if it does go towards 30, it would not be sufficient to break below S1 currently. So I'd maintain a sideways bias for the pair. Aussie dollar. Now, despite the hawkish comments in the minutes, so in the RBA July meeting minutes, it appears that the Aussie is moving in downwards projection. Well, that goes back to what we were saying to the fundamentals in terms of China's GDP. On a year-on-year level, it's down by 1%. This I would have expected. Why? China's economy was closed due to COVID. It's only opened recently. So, in comparison to last year, a 1% reduction, that's fair enough. But on a quarter on quarter basis, despite coming at 0.8%, whereas expected 0.5%. Now, a trader might say, yes, expected 0.5, perhaps it was priced into the market, came in higher, providing some support. Yet, if you see at last quarter's GDP, it was 2.2%. So, even it did came slightly higher than market analyst expectations. It wasn't that much. And in comparison to last quarter, it's significantly lower. Therefore, I think that China might be heading for a recession. We've been saying this for quite some time now. It appears that the financial data is starting to support our theory. So even if the RBA is going to keep hiking, if China's economy is not doing as well and they're going to be importing less of your goods, so your exports, then demand for your currency is going to be reduced. So even if you keep on hiking, so restricting supply, perhaps consumption, etc., your over reliance on China as the Australian dollar will be weakened due to the fact that there's going to be less demand for your good. Also, it's broken above R1, R2, R3, so we're going to be placing our support and resistance levels um, to accommodate these new price movements. So right off the bat, we've got S1 at 0.6800. So this is S1. Tested S1, failed to break below. I would not be surprised if it breaks S1 in this 4-hour candle. So this is my S2. Why? This is a turning point. As you can see, found resistance, yet opened and moved significantly higher. So this would be S2 for me at, let's just bring this to the nearest figure, 0.672, 0.67230. This would be S2. And then S3, I'd bring at around here. Perhaps we're giving it a bit too much space. Yes. So at a turning point, swing low, moving higher, validated here again as a turning point, validating support. So 0.6655. So this is S3. Now the challenge of finding R2 and R3 together. Excuse me. So this should have been here. We're going to be looking at Goldman Sachs as well today, given that their earnings are due to be released. It's going to be interesting to see what's going to happen. So, essentially, on a more fundamental level, they've been saying that the banks are going to be following more stringent banking laws, such as Basel III, perhaps, etc., etc. This is interesting. So, they're going to be held to higher capital reserves. So, that means less chance for them to make profits, as they're allowed to lend less and need to keep a higher level of reserves. So even if they do come in higher this quarter, next quarter I would anticipate every single bank to come in lower. Why? Higher capital reserves mean you're allowed to lend less, spend less, etc., therefore reducing your overall profits. Now, I'd be keeping an eye out on Goldman Sachs. Goldman Sachs has ditched their playbook. They've said that their earnings will not be what the market is expecting, so much lower than their counterparts or competitors. So JP Morgan, Bank of America, Morgan Stanley, their earnings might be better than expected, higher. But Goldman has already said that they're going to come in lower than expected, which will be interesting to see. So we have our two at 0.6955 and we have R3 at 0.7010. So I'd be maintaining. So if we form an upwards moving trend line, it seems to have broken it just now. So based on this and downward trend, despite temporarily breaking above, market correction to mid range, I would hold a bearish outlook for the pair. Even if the RBA hikes, I think the Chinese economic data is going to weigh more heavily on the pair. So let's look at Morgan Stanley. So this is Morgan Stanley on a 4-hour chart. As you can see, the training sessions without drawing support and resistance, just looking at the chart. It's in the mid-range of a bearish candle, RSI is above 50, moving towards 70. There was a shift, volume liquidity imbalance right around here. I'd maintain a bullish outlook for the stock based on the market expectations of their revenue. And this is an upwards moving trend line. So let's draw our support and resistance lines. So this would be S1. So you might be asking, why am I not taking this bullish candle here? I'm seeing multiple candles close or open around this level. So this is more valid for me. On a personal note, I think this provides more support. If we've got multiple candles opening, closing around a certain point, then it would validate it more, at least for me. So S1 at 85.75. Let's bring this 85.75. Now, we do not offer this particular stock I'm about to talk about now, but it would be interesting to monitor. BNY Mellon. Now, if you look at BlackRock's ETF filing, BNY Mellon is listed as the bank that's going to be facilitating transactions, etc., etc. So, if the revenue comes in lower than expected, that for me would be a worrying sign. If BlackRock is giving you money and you're not making money, then what are you doing wrong? So we're going to be giving ourselves some leeway here at the 80, excuse me, at the 83, $80 mark. 83, $80 mark. Also, BNY Mellon was one of the banks that gave money to Silvergate and First Republic. Interesting. They've given them money. I would expect them to be making money. And then I give it at the $81 mark. To be S3. So we're heading into earnings season. It's going to be interesting, I think. We have major companies announcing this week, such as Tesla, Netflix, and IBM. It appears that Netflix has been doing well with their attempt to crack down on the password sharing. They've still maintained a lot of customer and they have a loyal base, I could say. Based on that, they're not reporting any, well, they didn't report any minor differences since that was implemented. In this instance, we're going to take this high. At the 89.48 mark. So I'll be maintaining a bullish outlook for the stock, given the fact that the technicals are supporting the series and that market analysts are expecting them to beat last quarter's earnings and revenue as well. So it's interesting. If they don't meet those levels, I would not be surprised if it breaks below S1, moving towards S2. Yet, even if it does come in as expected, mine will move back to R1. I don't think it's going to skyrocket and move towards R2, as it's probably already priced into the market. And the deviation, however, could have an impact. So now we're going to be bringing our S3 at around here. So I'll explain why I'm not using the open of this bearish candle. I'm taking these 4 candles, and you can see the wick came and touched up. So it's validating that this was a significant support and resistance level. So 91.35. We're also going to be looking at Lockheed Martin. Lockheed Martin is a different story. Now, given the war in Ukraine, between Russia and Ukraine, the US has been supplying Ukraine with weaponry, machinery, equipment, etc., etc., etc. The way the US military machine works is that the Department of Defense opens these contracts and then contractors are allowed to bid on them. And based on this, I think that Lockheed has significant contracts with the Department of Defense in terms of providing munitions or equipment, etc. So I would expect Lockheed to continue to move in an upwards fashion. I have not even seen the stock. It's turning back. Okay, this is interesting. It's still above 50, so there is a bullish market sentiment, I'd say. It hasn't evaporated completely. I'm taking the open of this very strong bullish candle. Yet it might be more prudent to take these tops, 466.28. So this is S1. We'd be bringing S2 at around here at 458. That's where I keep it. And then I'd bring S3. I'd bring S3 around here, 449.20. So S1 is to S3, and then R1 at this bearish candle showed that there is resistance at this point. So from a technical view, despite failing to move higher and is now moving lower, it's still above 50. It shows a bullish market sentiment. And if we draw our upwards moving trend line from here, still validating this upwards moving trend line. So coming from market correction lower before moving higher. So that would be R1. And then I'd bring R2 at around here. Slightly higher. Okay, from 47.25. This would be R2. Yet it seems to be still too close, considering the gaps we've allowed. Perfect. Correction, 448.0. We're giving some space for the price action to move. If you look at the bullish candle, it could easily break above. So we're going to give the stock some leeway in terms of moving, since this is also a 4-hour chart. And then this would be my R3, 490.45. So essentially, we're maintaining a bullish outlook for Lockheed Martin and Morgan Stanley heading into their earnings today. On a technical basis, both stocks appear to be moving higher. But what is interesting with Lockheed is that it's moving lower, perhaps coming to 50, which could be testing of support at 446.28 before moving higher. If Lockheed Martin's earnings are an earnings per share are not as expected by the market, then I would not be surprised if it breaks and moves towards S2 immediately. Within 2 4-hour candles, I would not be surprised. Not in one, perhaps in 2, yes. Whereas, should it come in as expected, some support, perhaps coming at S1, taking out some buy orders around here, and then moving higher to break above R1, moving to higher ground based by gaining market liquidity. And lastly, we're going to be looking at the dollar CAD. So it's fluctuating around S1, and it's at around the 50 RSI figure, implying a neutral market sentiment. So I'd say perhaps a sideways fashion. Above S1, perhaps to R1. For a bearish outlook, it would need to break S2, move towards S3. For a bullish outlook, breaking above R1, next target being R2. So dollar CAD is heavily influenced by the price of oil, given its status as an oil exporting country. So Saudi Arabia's voluntary oil cuts up until December, if I'm not mistaken as well, maybe providing support for oil, therefore the CAD. Yet, I think China is also weighing heavily on the Canadian dollar due to its status as well as the world's largest oil importer. So if China's not doing well, then global demand for oil reduced, therefore lower prices, therefore Canada's oil exports will be bringing in less revenue for the country, hence weakening the loonie. And on that note, I'm going to be ending today's session. Thank you for watching, and until next time.
and welcome to another of our great videos. Today we'll be looking at slippage. Slippage refers to the difference between the expected price of a trade and the price at which it is executed. So in other words, the difference between the expected price and the executed price is the slippage. Market prices can change quickly, so slippage can occur during the delay between a trade order being processed and when it is completed. Slippage can occur at any time, but is most likely to occur during periods of higher volatility, such as during breaking news of economic data releases. In both situations, forex brokers will execute the trade at the next best price. Under normal market conditions, in forex trading, the major currency pairs would be less likely to experience slippage because they are more liquid. So, let's look at an example. For instance, you are trying to buy Euro USD with a price of 1.1050 and on your trading platform you see the price of 1.1050. You click buy as 1.1050 is the price that you want to execute your buy order at. You send your order to your broker over your internet connection. Once your broker receives the order, he needs to check that you have sufficient funds to cover the new order. From the communication transfer to data processing, the steps all create a delay. This means that from the time the broker sent the original quote to the time the order can be executed, the live price may have changed. The difference in the requested price and the executed price is known as slippage. Therefore, the final execution price versus intended execution price will have one of three outcomes: no slippage, positive slippage, or negative slippage. Thank you for watching.
Okay, so today we're going to be talking about advanced RSI trading strategies. So as I mentioned earlier, I'll just be covering for Desmond for today's webinar because he isn't well today. So first things first. So I'm Melanie. I will be your speaker for today. Here's our agenda for today. Firstly, we're going to go through briefly stochastic oscillator followed by RSI indicator, because RSI as well as stochastic are pretty similar in nature. So we're going to be comparing them throughout the webinar. After that, we're going to be talking about stochastic versus the RSI indicator. We're going to be seeing the different circumstances in which you use the different indicators. After that, we're going to be looking at using divergences in trading, as well as the different types of divergence that you can look out for. And lastly, we're going to be combining them together for high probability setups. And if we have time at the end of our webinar, I'll also pull out TradingView as well, and then we'll look at some live charts together and make use of RSI as well as stochastic to look for divergences or any breakouts. So throughout the webinar, if you guys have any questions, feel free to let me know in the chat or in the Q&A section. It should be working, but I will be monitoring that pretty closely. Okay, let's get started. Hi Dahiru, welcome to today's webinar. Okay, so let's start with what exactly is the RSI. So RSI stands for Relative Strength Index, and it's used to measure the strength of a security's price action over a specific period of time. So it's also commonly used to identify potential entry and exit points in the market. So we'll be going through that in a couple more slides. So the RSI indicator measures the magnitude of a security's recent price changes to determine whether it's overbought or oversold. Oh, I'm also curious to know whether you guys use RSI or stochastic yourselves when you're trading, because it's a pretty common indicator that we like to use as well. So I'm just curious to know how many of you guys use this daily or frequently for your trading. Okay, so how exactly do you use the RSI indicator? So it oscillates between 0 and 100, so it has values above 70, which are considered overbought, and the values below 30 are considered oversold. So why is it overbought? It's because when the RSI value is above 70, it suggests that the security is overvalued due for a price correction. So it's potentially indicating a sell signal. But when the RSI value is below 30, it suggests that the security may be undervalued and due for a price rebound, potentially indicating a buy signal. So traders often use RSI in combination with other technical analysis, as well as fundamental analysis. And I'll show you how we do that later on when we move on to TradingView. But it should be noted that typically RSI as well as stochastic are not used on their own. Okay, so let's move on to stochastic. Okay, my image is covering a little bit of the words, so sorry about that. But okay, I'm just gonna briefly go through as well, because you don't exactly need to know how it's calculated if you're using TradingView or MT4, because if you just select the indicator, it's already calculated for you. But this is just FYI. So the stochastic oscillator consists of two lines that fluctuate between 0 and 100. First line is called the K%, which represents the closing price of the instrument in relation to the high and low prices of a given period. So the second line is called the D, or percentage D, and it's the moving average of the previous line that we mentioned over a certain number of periods. Okay, so how do you use the stochastic oscillator? We'll just briefly go through this. So traders use stochastic oscillator to identify potential buy and sell signals as well. So when the percentage K crosses above the D line, it's considered a buy signal. And when the K crosses below the D, it's considered a sell signal. So they also look for divergences, which we'll be looking at in a couple more slides. Okay, so now let's look at the differences between stochastic versus RSI. So the reason why we are talking about stochastic as well as RSI, even though this webinar is for RSIs, is because they are both price momentum oscillators and they're widely used in tandem. So they each have different underlying theories, but the underlying method is about the same because it's based on price momentum. So the stochastic oscillator is predicted on the assumption that closing prices should move in the same direction as the current trend. So that's for stochastic oscillator. And meanwhile, for RSI, it tracks the overbought and oversold levels by measuring the velocity of price movements. So in other words, the RSI was designed to measure the speed of price movements, while the stochastic oscillator formula works best in consistent trading ranges. So you can see in my last point, I mentioned that the RSI is more useful during trending markets, whereas the stochastics is more useful in sideways or range-bound markets. Okay, so here's just a brief image to show you the RSI and the stochastic when used in tandem. Okay, so here let's talk about hidden support and resistance. So if you've been trading for a while, you will know that support and resistance levels are really important because they could be your exit and entry levels, as well as specific strong levels of confluence to take note of that could represent a reversal or a price breakout. So over here, we have, you can see price. We have a price chart and then we have a stochastics chart. So if you see here, the red dotted line is what we call the hidden resistance, because between each of these levels, there is a difference in the swing highs. So over here in the first column, you can see price made a higher high, whereas on our stochastics, the swing high remained at the same level. So it's a horizontal line here at the 93.52 level. Similarly, on our second level, price made a higher high. However, on our stochastic, it shows the same level. So this is what we call a hidden resistance. So here we have another example, but in this case, we have a hidden support. So the green line at the bottom of our stochastics chart is our hidden support level at the 4.2675 level. If we take a look at our price chart, at the exact same time, price is moving in an ascending trend line. How do you know it's a valid ascending trend line? Is when you have 3 significant points touching your ascending trend line. So you can see this is what we call a hidden support because the swing lows are all lining up in the same line at the 4.2675 level. This also helps us to identify the take profit, buy entry, as well as stop loss levels. Okay, let's move on. So you can see over here, okay, let me just briefly go back to the previous slide. Here we're expecting price to continue to rise from our entry to our take profit. Why? Because here on our stochastic, price is moving on a hidden support level. Even though price on our price chart is moving in an ascending manner. So you can see here, this is what happened after a couple of hours. So you see price continued to move not within the ascending trend line, but it continued up towards our take profit as we expected. Okay. So now let's move on to divergence in trading. So previously, in the previous few slides, we talked about hidden support and resistance. Now we're going to be talking about divergence. So they're both pretty important concepts to understand for RSI and stochastic oscillators. Okay, so for divergence in trading, it's a concept that compares the movement of a security's price and an indicator such as an oscillator to identify potential trend changes. So there are two main types of divergences. We have the bullish divergence as well as the bearish divergence. So the bullish divergence occurs when the security's price makes a lower low, while the indicator makes a higher low. Don't worry if you're a bit confused now. We'll be showing you a couple of examples in the next few slides. So this suggests that the downward momentum of the security is losing strength and a potential upward trend may emerge. Meanwhile, for bearish divergence, it occurs when the security's price makes a higher high, while the indicator makes a lower high. So this suggests that the upward momentum of the security is losing strength and a potential downward trend may emerge. So if you take a look at the image that I've included here, we have the regular divergence, hidden divergence, and exaggerated divergence. But for now, let's just take a look at the regular divergence. What we mean by price made a higher high is when the second swing high is higher than our first swing high. That's basically it. Whereas on our RSI, on our stochastic indicator, it shows that price made a lower high. Similarly, if we have a bullish divergence, price made a lower low on our price, whereas price made a higher low on our stochastic chart. Okay. Any questions so far? Let me just check. Okay, no questions. Let's move on. So we have our first example of a bearish divergence. So here if we take a look at our price chart first, you can see that we have a resistance, right? A horizontal swing high resistance with two swing highs at the 0.78145 level. Okay, but if we take a look at our RSI, we can see on this red dotted line, it's actually not horizontal and it's a descending line. So with price testing a key horizontal resistance level, which is this red dotted line on our price chart, we see a smaller high resulting in bearish divergence with RSI because our descending resistance line on the RSI caught the past two reversals correctly, which is the two swing highs. So it forecasts that we could be seeing a reversal over here from this point over here on the 29th of April. Okay, so this is how price eventually played out. We can see because of the previous two swing highs and the reversals from this level, we can see we predicted how RSI reversed very strongly off of the same level. And as a result, on our price chart as well, it also reversed off the same level at the same time. In this case, this is a good example because we have, firstly, as I mentioned earlier, we have multiple swing high resistance. We also have our RSI resistance, which is the bottom dotted red line. And then we also have bearish divergence on our RSI. So you want to get this kind of confluence, which confirms your analysis so that your analysis is more accurate. Okay. Okay, let's move on to our next example. So for this example, we have a bearish divergence. If you take a look at the points that I've marked out, from here to here on our price chart, we have price making a higher high. However, on our stochastic chart, on the same time zone, or rather on the same time frame, price made a lower high. So this is a bearish divergence, and we're expecting price from this level on the 19th of August. After this, we're expecting price to drop, which you can see it did drop. Okay. So now let's take a look at repeated patterns. So here we have from the previous slide, this price making a lower high on our stochastic chart. But if you see later on, a couple days later, price again made a lower high. But on our price chart, you can see this sharp increase in price and price made a higher high. So these two levels over here makes or rather a multiple swing high, you could call that on our stochastic chart, making it a hidden resistance level. So after that, since we have this hidden resistance level, we're expecting price to continue to drop since we have a bearish divergence. So bearish divergence means we expect it to drop, and if we take a look here on this slide, price did continue to drop. Okay. So let's move on to divergence potential. So we always take note of where the bearish divergence started, as this is the level where it would tend to reverse to. So if we take a look at our price chart, this is what we're talking about, this yellow highlighted area. But if you take a look, we also have a bearish divergence, and this is noted out by the purple lines. On our price chart, price made a higher low, a higher high, and on our RSI, price made a lower high. So in this case, since it's a bearish divergence, we are expecting price to drop. And drop to where? We're expecting price to drop to this yellow area because that's where our bearish divergence started. So we drew out this vertical dotted line so that it's easier for you guys to see within that same time frame the difference in the shape of the chart that you can look out for when you're identifying bullish or bearish divergences. So here's our divergence potential playing out. You can see price reversed to exactly where the divergence started to occur at the yellow highlighted area. Let me know if you guys have any questions so far. If not, we can move on. So now we're moving on to forecasting breakouts. Here you can see price on our price chart is moving in an ascending trend line. And on our RSI, it's also moving in an ascending trend line. But if we take a look between these two columns that we've highlighted, the RSI broke the ascending support line before price did. So this forecast that price might break out of that same support line. So point 2, price is barely breaking out of the ascending support line but shows strong recent bearish divergence versus RSI. So this is a very important point to take note of because at our yellow highlighted point, right at the start of the time period that we're looking at, you can see price broke out of this support line. However, on our price chart, it didn't. So we're expecting price to do the same as well. But how do we know this is going to happen? Just from bearish divergence alone, it might not be enough to confirm this breakout. Which is why I mentioned earlier, the confluence is so important in ensuring your analysis is accurate. So point 3, we have RSI breakout as well as the bearish divergence and price breaking out, just a little small bit on the 30th of April. So with all of these confluence, we can then say that our analysis has a higher probability of occurring. So you can see price broke out and dropped strongly, exactly as how we predicted. Sumit asked if it's possible to get a live example in TradingView with gold, Euro USD. Yeah. So after I'm done with my slides, we will move on to TradingView and I'll show you guys how we can make use of RSI and stochastic on, maybe we'll use those two charts first. Okay, let's move on to the next example. So once again, this is another example of a price breakout. So if you take a look here, price is continuing in a descending trend line, or rather not in a descending trend line, but rather a descending manner. And on our RSI, it's also descending in the same manner. However, if we take a look at the RSI chart, you can see it's briefly breaking out a small bit out of our descending resistance. So the reason why I wouldn't call this a descending trend line is because it doesn't have 3 valid points. So that's why we call it a descending resistance instead. So this is a couple days later. From this point, you see a bullish divergence. Price on our price chart is making a lower low, whereas on our RSI, price is making a higher low. So first point, price is now testing the descending resistance line and we're wondering if it will break it. Point 2, descending line breakout. As I mentioned earlier, on our RSI chart, price recently broke out of the descending line. And number 3, recent bullish divergence suggests that we could be seeing a strong reversal. So once you have all of these points that line up nicely, then you have confluence that your analysis is pretty accurate. And true enough, this is exactly how it broke out of our descending resistance line as we forecasted in our RSI. Okay. So now let's take a look at a live, or rather a GIF of bullish divergence. So if we take a look at just the image first, you can see the red dotted line that I've indicated over here has made a lower low. Price is also moving within a descending trend channel. But on our stochastic chart, price has made a higher low. So this is a bullish divergence, and I'm expecting price to continue to move upwards after this second vertical line. So if we take a look at the GIF that I've created, you can see that's exactly what happened after this divergence. Price continued to move up. But what I really wanted to highlight over here is the confluence. So if you take a look here, we have a resistance line, over here at the 1.56099 level at the swing high. And I also have a Fibonacci projection, starting point here and middle point here and ending point here. And this is my 100% Fibonacci projection. So this lines up nicely with my 1.56099 level. So this creates confluence that it's a pretty strong level, and I'm expecting price, even though to continue up, I'm expecting price to reverse off of this level. And if we take a look at our GIF, you can see price tested the level many times after it broke out of our descending trend channel. Just give you some time to take a look at the GIF. Notice how it tests this level many times. And it tests this level so many times because of the strong resistance from the swing high as well as the Fibonacci projection. Okay, so let's look at bullish divergence now. Here, I'm also making use of the Ichimoku cloud. As I mentioned earlier, we typically wouldn't use RSI or stochastic indicators on their own. We'll use them in conjunction with another indicator, as well as different graphical analysis as well. So over here, you see between the two lines that I've highlighted, price has made a slightly lower low, and on our stochastic, price has made a higher low. So I'm expecting price to continue to rise. And if you look at the GIF, that's exactly what it did as well. Okay. Okay, that's it for my slides. Let me just stop sharing so that I can pull out my trading view, and then we can take a look at some charts together. Okay, so Sumit mentioned gold. So let's go ahead and start our analysis with gold. Okay, let me share my screen. Okay. So here we have our gold chart. Before we start analyzing, a good habit would be to look at larger or longer time frames of gold. So let's take a look at the monthly time frame. So this is just to get an idea of where prices are heading to, or where prices were in the recent past. So this is our monthly, this is our weekly. You can see price is testing this area over here. Okay, and we only really start analyzing on our daily, 4-hour or 1-hour chart. We don't really analyze on the 1 minute to 30 minute because there tends to be too much noise on those charts. Sorry about that. So we typically just use hourly, 4-hour or daily time frame. So how do we decide which to use? So we typically just take a look between the 3 charts, and then we see which chart has the clearest price movement. So here you can see my 1-hour chart, the price movement isn't very clear. Oops. Compared to our daily as well as our 4-hour time frame. I think I'm gonna stick with daily time frame because you can see the clear movement in price up and down. Okay, I think we can all agree that prices are moving upwards, and you want to follow the general trend of the chart. So let's see if we have so before we begin with our RSI indicators or stochastic indicators, we're going to start by graphical analysis. Let's see if we have any parallel channels or any trend lines. Okay. So we don't have any of those, but we know that price is moving upwards. So now that we have the general direction of where price is heading towards, let's go ahead and look for support and resistance levels. So your first support would be the nearest swing low to where price currently is. So price is currently at 1966. So my first swing low, or rather my first support, would be the nearest swing low to where price currently is, which is over here. So a good habit to have would be to pull back our support level as far as we can without cutting too many bodies of candlesticks. Okay, so like 1 or 2 is fine, but yeah, so 1 or 2 is fine. Sorry about that. So 1 or 2 is fine, but not too many. So the reason for doing this is so that we can see how many times price has tested this level in the past. And that also tells us how significant this support or resistance level is. Okay, so here's our first support level. Now let's pick out our first resistance level. So your first resistance level, similar to first support, would be where the swing high where that's closest to where price currently is. Okay? All right. So if we're looking for an entry position, we will look for maybe over here, closer to where current price is. At this swing high resistance here. Okay, so now that we have our support and resistance levels settled, let's go ahead and look for some Fibonacci levels as well. Okay, I can see at this level or this area, we have the 78% Fibonacci projection lining up nicely with my first resistance. So we also have kind of an intermediate resistance level here. So I'm just going to use a dotted line to take note of that. And this is also lining up with my 61.8. So we want to take note of these levels because price, we're expecting price to go upwards. So price is likely to, sorry, okay, sure. So we're expecting price to move up. That's why we're going in for a buy, right? But since we have Fibonacci levels that are lining up nicely with our resistance levels, this could mean a confluence area, and price could reverse off of these levels. So if you're heading for a buy towards the first resistance, we will wait for the price to first break out of this level here, this confluence area here, 61.8, as well as this intermediate resistance, before going in further to go for a buy towards our first resistance. Okay, so now that we have our Fibonacci levels as well as the resistance and support, we can go in and look for our indicators. Okay, so here is our RSI chart. So when you have your RSI, the first thing we're going to look out for would be the general direction of price. So here I have an ascending trend line for my RSI. Okay. Next, we're going to look for divergences or hidden support and resistances. Okay. Okay, I hope this is better. Otherwise, I can close it as well. Okay, let me know if this is better. Okay, I'm gonna get rid of my 100. So for Fibonacci projection, let me just recap. We use these three main levels, 61.8, 78.6, and 100%. In this case, I can see my 100% isn't really relevant, so I'm gonna get rid of that so that my chart is clean. Okay, so let's get back to RSI. So I'm gonna highlight some areas where there are significant divergence points. So how you take note, you can use a vertical line to just see different areas and see whether the price make a higher high or lower low. So for example, over here. Okay, let me make this bigger. Okay. So we take a look over here between the two lines that I've highlighted, price actually made a lower low. But on our RSI chart, price made a higher low, if you can see here. So this is what we call a bullish divergence. And then after this point and the 27th September, we're expecting price to rise, which you can see it did rise, even on our price chart as well. Price went up and it continued going up. So that's how you look for bullish divergences. If we're looking at current price, I suppose over here would be the most recent one. Let me try and zoom in. So if you can see between these 2 points over here as well as here, price is pretty stable. It's on the same first support level. But if we take a look on our RSI, it's actually moving up. So it made a higher low. So we can expect price to continue to keep going up. So after doing this analysis, you can go in with Ichimoku or your MACD just to get more confluence. Okay, so you see my Ichimoku price is moving above the cloud, which gives us a bullish signal. So it also gives us more confluence that price is heading in a bullish momentum. So let's try MACD as well. MACD is also moving in a ascending manner because of the green area, which signifies a bullish signal. RSI period value over here. We typically just stick to the same to the same settings. Okay, no worries. So I think I had another request for Euro USD. So that would be the last chart that we'll go through really quickly just to identify divergences. Okay, so same thing. Look at monthly first. You can see price has been dropping. Weekly, daily. Okay, on our daily chart, price seems to be moving in an upward trend. 4 hours as well as 1 hour. Okay, I think I will analyze on our 4-hour chart because that seems to be the clearest movement in price. So let's go ahead and get started. We're going to start by graphical analysis, see if I can get any trend channels or trend lines. We typically look out for trend channels more so than trend lines because then we can see whether price is going to continue to move within the trend channel or whether it is going to break out of it. Okay, so you can see here price is moving within a ascending trend channel. Let's go ahead and plot our support and resistance levels. Over here, I have an overlap support level since we have a swing high as well as a swing low here. On my Fibonacci retracement, I can see that price is the 38.2% lines up nicely with my first resistance here. Let me just label this. First support and first resistance. Okay. So this is just a very brief graphical analysis example, but I want to focus more on the RSI indicators. Okay, so same thing, I'm going to pull out my vertical line and see if we can find any divergences. Okay, I think we have one here. Okay, yes, but it is not very obvious. So here on our price chart here, it's a horizontal level. You can see the wick of the candlestick here. Right, so it's a horizontal level, whereas on our RSI chart, price is moving upwards. So price is making a higher low on our RSI, whereas on our price chart, it is staying in a support level, horizontal support level. So this is let me color it green because it's a bullish divergence. So we're expecting price to move upwards, which you can see that it did. Okay, we can see that on our RSI, we also have an ascending trend channel, whereas on our, let me pull this back. So on our price chart, we have a support level instead, horizontal support level. Okay, let's see if we can find some more major examples of a divergence. Okay, over here we have one. Here price made a lower low, whereas on our RSI chart, it has made a higher low. So you can see price did indeed go up immediately after this point, immediately after the divergence. Over here as well. So they're pretty easy to look for once you get the hang of it. And they're quite common as well. So it's important to make use of different analysis techniques together with this in order to get the most accurate analysis. So here's another one that I've just highlighted. Price made a lower low, and on our RSI, price made a higher low. And you see price shot up immediately after that. Okay. I think you guys kind of get the hang of it. Let me just see if we have any questions. Okay, so let's maybe use stochastics as well, since they are often used in tandem. So you can see, even though they both make use of price movement, there can be some discrepancies between RSI as well as stochastics. So sometimes it's good to look at both. Here we see price moving in an ascending trend line. However, price broke out of this support level. So we could be looking at a breakout. And over here as well, just now we pointed out that on our RSI, price made a higher low. However, on our stochastic, price made a lower low. So what happens if you are in this situation where your stochastic as well as your RSI don't exactly line up? Well, we have so many other indicators here to use as well. Bollinger Bands, Fibonacci levels as well, MACD, all of that. So you can pull out any and just go accordingly. So see for yourself, price moving below. So it might be giving me a bearish signal. If we have a MACD, it might show us something different as well. So it's important to get used to and see which indicators you are most comfortable using and you are most reliant on, and just trust these indicators once you really know how to use them. Okay, so before I end this webinar, let me just show you guys. So we have, we have our VIP trading room. So all of the information is on IronFX.com. You get, depending on your account types, you can get access to different services. So let me just show you really quickly what the VIP trading room looks like and the different functions that they have. Okay, So once you have registered, once you've logged on to the IronFX VIP trading room, you'll be welcomed by Desmond. And then over here in this channels column, you can see there's different sections for you to take a look at. We have the chit chat function where you can ask questions. You can ask questions about the fundamental analysis, about your potential setups as well. There are also training videos. And then we have news, so which would really help you for your fundamental analysis. So we have news every single day. And then we have the different currency charts. So here we have majors, commodities, and the different crosses as well. So it's basically like a mini trading view, but you get extra practice because you have all of the functions that TradingView has. You can change the time frame as well if you so wish. We have indicators as well. So how you create an analysis, you press create analysis, put out your analysis here. And once you have done so for example, if I say price is moving in a descending trend line, for example, let me mark it out. Oop. Okay, price is moving in a descending trend channel. Ooh. Okay, so here's the opacity. So it's highly customizable as well for your own charts. So you can indicate the directions, title, preferences. So if I'm gonna write descending trend channel, and I can highlight this, link object to text, and I just click on my parallel channel, confirm, and then I post to multiple channels. And in fact, after creating your analysis, you can tag Desmond or any one of our pro traders to ask them to check your analysis for you. So this is a really good way for you to practice your technical analysis as well. Okay. Okay, I think that's about all I have for you today. Let me stop sharing. Okay, let me know if you guys have any other questions. Thank you guys so much for coming today, and I hope you guys found this helpful. And I will see you guys maybe next week. Desmond should be back by next week though. So I'll see you guys whenever. Okay, thanks guys. Bye. Have a great rest of your week.